Live from the New York Stock Exchange, you're watching Financial Buzz Weekly. I'm Elena Bay. Now here's a review of this week's market news. After losing ground in the first week of 2015, stocks were falling again this week. On Monday, oil prices declined after Goldman Sachs cut their 6-month forecast for WTI to $39 a barrel. Aluminum giant Alcoa kicked off earnings season on Monday, topping projections with a $6.4 billion revenue. Tuesday was a big day for the labor market. We got the job openings and labor turnover survey report, which is one of the Federal Reserve's favorite economic indicators. According to the report, U.S. companies had 4.97 million job openings in November, a post-crisis high. Apple was a big contributor early on to the rally after Credit Suisse upgraded the company to outperform. But after a wild ride on Tuesday, stocks gave up early gains and finished in the red. On Wednesday, U.S. stocks declined for a fourth straight session as an overnight collapse in the price of copper pushed futures lower, with stocks never able to gain momentum back during the day. In December, retail sales posted 0.9% loss, and investors are worried about global economic growth. Earnings season for big U.S. banks kicked off with reports out of Wells Fargo and JP Chase. Wells Fargo was able to beat Wall Street forecasts with a slightly higher net income, but JP reported a 7% decline in fourth quarter earnings, which sent the company stocks down 3.5% for the day. JP Chase, the biggest bank in the U.S. by assets, has been hit pretty hard by legal costs over the past year. On Thursday, stocks continued its downturn for a fifth day, with the S&P finishing below 2,000 for the first time in a month. Citigroup and Bank of America were the latest U.S. banks to report earnings. Both companies posted disappointing earnings per share. There was some big news coming out of Switzerland. The Swiss National Bank announced that it would give up its minimum exchange rate, which surprised a lot of central banks and investors. Jobless claims jumped sharply to 316,000, the highest level since September. Manufacturing in the New York region climbed to 9.95. PPI fell 0.3%. Inflation at the producer level continued to decline on lower energy costs. On Friday, industrial production for December slipped 0.1%. Consumer price inflation fell 0.4%, and Goldman Sachs fell after the investment bank reported a 7% decline in profit. Now let's take a look at some company highlights. Target is giving up on Canada and closing up shop. The retailer announced on Thursday that it's going to abandon their expansion into Canada and close all 133 stores, which have been losing money since Target arrived in the country less than 2 years ago. Shares of Chipotle slipped after the fast food chain stopped serving pork at nearly a third of its locations. Chipotle suspended one of their pork suppliers for violating the company's standards. Chipotle demands that their supplier raise their pigs in humane conditions with access to the outdoors. But this decision will likely have a negative impact on Chipotle's first quarter results. A cash-strapped division of casino giant Caesars Entertainment Corporation filed for bankruptcy protection Thursday in Chicago, hoping to get out of $18.4 billion of debt. The division owns and operates most of Caesars' 50 casino hotels, including Caesars Palace on the Las Vegas Strip. But the bankruptcy filing doesn't apply to the parent company Caesars Entertainment. Among its casino peers, Caesars Empire remains the largest. Thanks for watching Financial Buzz Weekly. I'm Elena Bay, and we'll see you again next week.